Greetings, everybody. Welcome to Liberty Call. Today is Monday, May 8th, 2023. Hope everybody's having a fantastical day out there in the interwebs. It is kind of overcast here in Colorado. Was sunny earlier, but looks like we might have some rain coming in, which is not uncommon this time of year. God, my beard's all messy. Anyways, I hope, like I said, hope everybody had a good weekend out there. Markets today kind of flat. I think folks are waiting to see what the inflation data is going to look like later this week, and people are, hoping that it's going to go down so that the Fed could, start printing easy, cheap credit and all that good stuff. But we shall see what happens later this week. All right, well, let's go ahead and take a peek and see how the markets did today. The Dow Jones was down 0.17%, 55 points, closed at 33,618. The S&P 500 was flat, up 0.03%. Closed at 4137. NASDAQ was up 0.18%, closed at 12,256. The VIX was down 0.81% today. It's currently holding at 1705. Canada was up 0.21%. Brazil was up 0.88%. And Mexico was up 0.16%. Going over to Europe, Germany was flat at down 0.05%. UK was up 0.98%, probably due to the coronation. Everyone's all giddy because of, now they got the king is official. Yeah. Anyways, France was up 0.11%. Netherlands was up 0.29%. Spain up 0.7%. Italy up 0.28%. Switzerland up 0.35%. And Portugal up 0.7%. In Russia, both exchanges were in the red. The MOEX was down 0.42. The RTSI was down 1.39%. And the overnights in Asia, the Nikkei in Japan was down 0.68%. Australia up 0.78%. New Zealand up 0.5%. In China, the Shanghai was up 1.81%. The Shenzhen Component up 0.4%. China A50 up 1.08%, DJ Shanghai up 1.39%, and Hang Seng up 1.24%. Taiwan weighted came in up 0.47% for the day. So, like I said, seems like, at least here in the U.S., I think people are just kind of on pins and needles. The markets were in the red most of the day, but came back around here in the late part of the day. All right, let's jump into today's weekly economic update. All right, here we go. A Friday rebound triggered a big tech by big tech companies' earnings, beat a strong jobs report, shaved much of the week's accumulated losses. The Dow Jones Industrial Average only fell 1.24%, while the S&P 500 lost 0.8%. NASDAQ was flat at up 0.07 for the week, and internationals slipped 0.62% for the week. All right, and we can see for the year, the Dow Jones is up only 1.59%. NASDAQ is up 16.9%. Internationals are up 9.6%, and the S&P 500 year to date is up 7.73%. So, but again, you remember markets were down quite a bit last year. So coming up a little bit has certainly not caught up most of that ground. Stock seesaw. Renewed regional bank concerns weighed on investor sentiment last week, despite the rescue of a troubled bank before the start of the trading week. But worries were not isolated to regional banks. Secretary of Treasury Janet Yellen commented that the federal government may hit its debt ceiling earlier than expected, heightened investor jitters over a potential technical default. The stock market also slipped in wake of the latest rate hike decision by the FOMC, the Federal Open Market Committee. Solid earnings from one mega-cap tech firm and a strong employment report steadied investors, resulting in a Friday bounce that ended a volatile week on a positive note. Fed rate hikes. Amid concerns in the regional banking sector and tightening credit conditions, the Fed elected to increase interest rates by 0.25%, citing elevated inflation and robust job gains. Investors were more focused, however, on what the Fed signaled about its plans since the expected rate hike. The Fed indicated it may pause further rate hikes, suggesting that further decisions will be based on economic data and prevailing financial conditions. Following the announcement, interest rate traders assigned an 89% probability that rates would remain unchanged following the next meeting in June. All right. Economic data coming out this week. Wednesday, we have the Consumer Price Index. Thursday, we have the Producer Price Index and jobless claims. Friday, we have consumer sentiment. So a light week on data. Also, a much lighter week on earnings. Monday, today, we have PayPal reporting earnings, Skywork Solutions, and KKR. Tuesday, we have Air Products and Chemicals. And Wednesday, we have Occidental Petroleum and Walt Disney. All right. Well, that was everything for the weekly update. So some good stuff there. All right, let's jump into today's market recap. SP 500 struggles for direction ahead of inflation data. All right, the SP 500 struggled to find direction on Monday as investors waited for further catalysts, including the CPI report due later this week. The report is expected to show an uptick in inflation for April. The data comes after Friday's report on the tight labor market in the U.S., which showed that the economy created more jobs than expected in April, and the unemployment rate fell unexpectedly. This forced investors to rein in their bets on rate cuts this year. Regional banks were in focus as PacWest Bancorp saw its shares give up most of their gains despite opening up more than 30% higher after the bank cut its dividend to boost its finances. However, Berkshire Hathaway's quarterly results beat Wall Street estimates, which helped boost financials, with the company's shares rising about 1%. Consumer staples were a drag on the market as Tyson Foods slashed its revenue outlook after reporting an unexpected loss in the first quarter, leading to a 15% slump in its shares. Big tech companies were mostly higher, with Meta Platforms and Alphabet leading the way amid reports that Google plans to make search more personal by incorporating AI chat and video. Meanwhile, Zscaler raised its full-year guidance, sending its shares up more than 20% after pre-announcing better-than-expected quarterly results with new contract wins boosting revenue. On the political front, U.S. Treasury Secretary Janet Yellen, the dumbest human on the planet, has warned of dire consequences should the U.S. fail to raise the debt ceiling. Yellen has previously warned that the U.S. could default as early as June 1st should Congress fail to lift the limit on what the federal government can borrow. President Biden is scheduled to meet with House Speaker Kevin McCarthy and other top congressional leaders this week to find a solution to the debt ceiling standoff. If there was only something they could do, maybe quit spending like drunken sailors. And as a former drunken sailor, these guys are, they give us a bad name because, they spend money on stupid stuff like NASA and welfare and all the other stupid stuff that, I as a taxpayer should not be funding, especially if I think it's a, wasted project. All right. Well, that was everything for the week, for the market recap. Got one article here about gold. Central bank gold buying off to a record-breaking start in 23, led by Singapore. Let's see what that means. I should have brushed my beard before I started this. All right. According to the latest report from the World Gold Council, central bank gold buying started strong in 23, reaching 228 tons in Q1, a 176% increase compared to the same period 1 year ago. This was the strongest first quarter on record, despite being lower than the figures seen in the previous 2 quarters. The rolling 4-quarter total reached a record 1,224 tons in Q1 due to a massive buying in recent quarters. However, data for the current quarter contains a significant estimate for unreported activity. 4 central banks accounted for the majority of reported purchasing during Q1. The Monetary Authority of Singapore was the largest single buyer during the quarter, adding 69 tons of gold, bringing its total gold reserves to 222 tons. The People's Bank of China added 58 tons, lifting its gold reserves to 2,068 tons. Turkey was also a big buyer, with official reserves rising 30 tons. The Reserve Bank of India added the modest 7 tons, while the Czech Republic 2 tons, the Philippines 1 ton were also notable buyers. Selling was much more modest by comparison, with the Central Bank of Uzbekistan selling 15 tons and the National Bank of Kazakhstan selling 20 tons, being the largest sellers of gold during the quarter. According to the World Gold Council, it is not uncommon for central banks that purchase gold from domestic sources to be frequent sellers of gold. Cambodia sold 10 tons, UAE 1 ton, and Tajikistan 1 ton were other notable sellers. Croatia reported a 2-ton reduction in its gold holdings in January, but this was a transfer to the European Central Bank, which is required of all countries joining the euro area. Overall, the central bank buying remains robust, with little to indicate that this will change in the short term. As such, purchases will likely continue to outweigh sales for the foreseeable future, and this may explain in part why gold trades just shy of all-time high, north of 2,000 per ounce. However, the exact pace of this net buying is difficult to determine. And why do I bring this up? Why do you think these central banks are buying so much gold? Is it possibly because there could be a fiat crisis here coming up in the near future? That would be my guess. But hey, anything can happen. All right, one little extra bonus here for you folks. I've got, this was a podcast I listened to probably a little more than a week ago. Came out on April 29th. It's from the Bob Murphy Show. Bob Murphy is an economist, super smart guy. And his guest on this episode 268, was Daniel Miller on why and how Texas will leave the Union. And being a native Texan myself, this is near and dear to my heart. I'd love nothing than to see Texas leave the Union as it stands right now. And we got a little bit of information, or Mr. Miller talking about he's the head of the Texas National Movement and author of Texas, Why and How Texas Will Leave the Union. So we'll listen to a couple minutes here. And if you want to listen to the full podcast, it's linked in the show notes, so you can listen to the entire thing in its entirety. So let's go ahead and take a minute to listen to this.
Yeah. On the one hand, it's almost a story in and of itself that you would think, well, yeah, sure, why don't they have a referendum? And, if it's a bad idea, it'll get blown out of the water. But your point is you're fighting just to let people say whether they want to do it or not.
Yeah, and that's the thing about it. You have to look at this almost in two separate stages, right? There is the everything that has to be done to get the vote, and then there's everything that has to be done to win the vote. And so when you're looking at, and this is the way I refer to it, when you're looking at the Texit process along this continuum, right? People say Texit will never happen. What they don't realize is that when you study these movements around the world, according to kind of the way their process goes, it already started. It started the moment that we founded an organization to explicitly pursue this and began to gain ground, right? So you could say the Texit process started in 2005, but the peak of that gets to that middle point, that next massive goalpost is getting Texans to vote on the issue. Because all discussions about Texit are academic until we get a vote, and then, we can have the conversations with the sort of gravity that having a vote at the end of that tunnel brings, okay? So we have to remember, and for those who don't know, here in Texas, none of the states really have a mechanism for doing this. And some people who don't understand the Constitution or the Union or states, they will say, well, that tells you that it can't be done. Well, that's not the case at all. Every state had an ultimate right to decide which process they use. Here in Texas, we have Article 1, Section 2 in our Texas Constitution that says that the people have at all times the inalienable right to alter, reform, or abolish their government in such manner as they may think expedient. So, that's the thing about it. We have to determine the process. But what that also says, because the very first words of that is all political powers inherent in the people, ultimately that means for us it must be a referendum. Texas entered the Union via referendum. If we're going to be out, then we have to have the referendum. That being said, for that to happen, we have to have some mechanism in law here in Texas to enable that vote. And that's what the bill that we propose, the Texas Independence Referendum Act, does, is it literally just puts the vote to the people. So whether we're for or against Texit, anyone out there, we're obviously pro-Texit, and we're willing to argue that all day, the pros and cons. But whether anyone is for it, against it, or undecided, at a minimum, they should agree that we should be able to have a vote on the issue.
Just out of curiosity, these what would...
All right, we'll go ahead and stop that there. It's about a little over an hour conversation. And like I said, it's being a Texan, and majority of my clients are Texans. So that would hopefully be something you find some interest in, and would save, people of Texas a lot of money, because they're spending a lot of money that goes to the federal government that just gets wasted on dumb projects that, most people would probably like to see that money kept in their own backyard and spent on things that they care about, as opposed to, blowing up brown people in the Middle East and starting wars in Ukraine and Russia and all sorts of dumb problems that we've created over the last few decades. But anyways, all right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information's there. I hope you have a wonderful evening, and I'll talk to you next time. Adios.